Now, according to Goldman Sachs, they are expecting that artificial intelligence applications are going to add a 31% increase in energy demand that we otherwise would not have if AI did not exist whatsoever. And that's just to the US economy alone. Now, on the global scale, they're expecting an increase of 21% from artificial intelligence alone. What's up, apes? Welcome back to another edition of the 𝗪𝗚𝗀𝗀𝗀 daily podcast of the day. Thank you all for joining us here once again on this beautiful Monday, October 21st, 2024. It is currently 6:55 p.m. in the evening here at the 𝗪𝗚𝗀𝗀 global headquarters, and we're very glad to have you back here with us on the world's most popular and influential podcast as part of the world's most popular and influential media empire that is the 𝗪𝗚𝗀𝗀. Thank you guys for joining us here. Hope your week is off to a good start, because it certainly wasn't for the equities market. And more specifically, what I mean by that is it certainly wasn't a good start to the week for the WSO Alpha portfolio. This is our proprietary long-only equities portfolio, by the way. We were down 41 basis points on the day, thanks mostly to Builders First Source, Elevance Health, Enphase Energy, Visa, Zillow. Basically anything linked to housing or financials was off for the day because of a rocky road forward for the path of interest rates. But we saw a good performance from names like Nvidia, Dollar General, Apple, Airbnb, and some others. So pretty good day for tech stocks overall, and that's why you saw the Nasdaq up 27 basis points, whereas the S&P 500 was down 18 basis points. And then, like I said, the WSO Alpha portfolio down 41 basis points of the day. Small cap stocks down 1.57% or 157 basis points by the Russell 2000. So it very much was a stock picker session here on Monday. Not that anybody cares, but the Dow was down 80 basis points as well. So, very interesting day. We're still in the thick of earnings season. Now, this Monday, there was a little bit less companies than there had been towards the end of the week. Most companies don't like to report on Monday or Friday because it gives analysts too much time to actually pour over their numbers before the next set of earnings comes out. And obviously, nobody wants more attention than everybody basically just wants to minimize attention as much as possible. So, once again, we saw... we did underperform the S&P today, just to confirm once again. S&P down 18 basis points. What are they, fucking scared of falling further than that? Not us. We'll fall further than anybody. We're not scared over here at the 𝗪𝗚𝗀𝗀𝗀 global headquarters. Anyway, speaking of things that are falling, let's go ahead and get into some of these banana bits, because this first one here, Goldman Sachs, God damn, I don't know if they woke up on the wrong side of the bed here today or what, but they are expecting the average annualized returns for the S&P 500 to fall quite a bit over the next decade or so. So we're officially awarding them the Debbie Downer of the Decade award, because they are calling for an annualized return for the S&P 500 between 2025 and 2035 of 3%. Basically, they're expecting it somewhere in the range of -1% to 7% as an annualized return, but that is far, far lower than what we've seen in the recent 10 years, up closer to about 10, 11, or 12%, depending if you're factoring in dividends, if you're doing total return versus just share price return. Meanwhile, at the same time, Elon Musk, Tesla, and Warner Bros. Discovery are all... they're going to be sitting next to each other on the fucking trial bench, because they are getting hit by a lawsuit from the creators of Blade Runner 2049, because Musk, Tesla, and Warner Bros. Discovery used what the makers of Blade Runner 2049 are calling a, quote, AI ripoff from scenes from that great movie to promote the Cybercab event. And it certainly does look like quite the ripoff if you go ahead and check out some of those images. Now, moving on down below, speaking of movies, but this is going to get us into much shittier movies, Disney is on their round 2 of replacing CEO Mr. Bob Iger. Now, it's not going to happen until 2026, so they're giving themselves some time to find somebody who can actually run the place, as opposed to just seeming like they hired one of the dwarves from Snow White to come in and run the ship of the world's largest media empire. So, instead of just hiring the next guy like they did with Bob Chapek, they're actually going to take their time and find somebody who's capable of doing this job. Crazy idea, I know. But at the same time, former Morgan Stanley CEO James Gorman will be coming on to Disney as the executive chairman. Now, moving on down below, another classic American brand, we have Nike, finally getting some competition in terms of sponsoring NFL uniforms. Now, the NBA, WNBA still went to Nike once again, but the NFL deal is officially on the block once again, so we'll see if Nike can win it out or if they lose to some competitors. Speaking of another American brand, Donald Trump, I'm sure everybody saw him working at McDonald's over this weekend. Jesus Christ, I can't even imagine how much shit would have come out of the bottom of my pants if I pulled up to a McDonald's drive-thru window and I had fucking Donald Trump there serving me. Holy shit, that was fucking crazy. But speaking of Trump, Trump trades are popping up all over equities markets, fixed income markets, currency markets, crypto markets, everywhere people are starting to bet on Donald Trump. people are getting really fired up, or I should say Trump supporters are getting really fired up over the fact that he is edging out Kamala, he's edging out Kamala on all of these betting platforms. But wouldn't you think that the people most likely to place bets are probably Trump voters? Like, they're probably lean a little bit more right, more male, more risk-taking, so they're going to be more willing to put this money on the line. And simply by doing so, your biases are going to come into play, where you say, like, okay, I think Trump has a greater odd of winning because I want him to win. Even if you think that that's totally removed from, an individual basis, when you kind of scale up to this level, those biases can't be ignored. So, take this with a grain of salt. It's not the flashing green sign or the flashing orange sign, I probably should say, that many think it is. Finally, Chinese companies, fucking crazy, going insane over there. They're officially taking out state-backed debt in order to buy back their own shares. So effectively, they are cutting off their foot in order to avoid starvation. That's effectively what we're seeing. And, there's only so much of yourself that you can eat before, you're done anyway. So let's go ahead and move on into our big macro monkey story of the day. We got an interesting one for you today, but our message out of the macro monkey on this beautiful Monday is going to be thank you to big tech companies. Thank you, big tech, for stealing my personal data. Thank you for selling my personal data, and thank you for making a fuck ton of money off of it, because you might just save the United States in doing so. So, you guys know, I don't have to tell you guys that we're the most powerful and influential media empire in the entire world, so it makes sense that after our August 14th article talking about the importance of investing in nuclear energy, that everybody and their mother decided to start loading up on nuclear energy. Every big tech company in America seems to be hooking up with a nuclear energy firm. It's good for the surge in energy demand that's expected to come from artificial intelligence, but it's even better for the entirety of the U.S. economy. You probably heard your nerd loser economics 101 professor talking about some shit called positive externalities. Sounded like some real nerd meaningless shit back then, but this is where it actually comes to fruition. So let's take a step back. First and foremost, we have to understand, when you use ChatGPT, when you run a query on ChatGPT, it's going to use roughly 10 times the computing power that the typical Google search is going to use. That's because of the difference in exactly how the search mechanisms work. I am way too stupid to understand how it even works on Google, so don't ask me how it works in a black box like ChatGPT, but because it is an artificial intelligence system, it's going to take about 10 times the computing power in order to respond to that query. Now, in other words, 10 times the computing power, that really means 10 times the energy usage. So, over the coming years, over the coming decades, LLMs, they're expected to become one of the most basic artificial intelligence use cases. It's one of the first ones, but it's kind of seen as, something that's a little bit more gimmicky compared to some of the stuff that's going to be coming online in the future. So all of this is to say that energy demand is going to absolutely explode as artificial intelligence does. Now, according to Goldman Sachs, they are expecting that artificial intelligence applications are going to add a 31% increase in energy demand that we otherwise would not have if AI did not exist whatsoever. And that's just to the US economy alone. Now, on the global scale, they're expecting an increase of 21% from artificial intelligence alone. So again, huge increases in energy demand. This is global energy demand of 21%. 21% doesn't sound huge, but we're talking about the entire fucking Earth and all of the energy that allows us to do anything from, me talking to you right now, to the light that's fucking blinding me, to the reflect to the shadows on this green screen created by the lights in the room around me, like everything. So, although the numbers sound pretty low, it's a fucking huge development when we scale it up to the global level. So in recent weeks, Microsoft, Alphabet, aka Google, Amazon. So really, Microsoft, Google, Amazon, ever heard of these companies? They have entered into power purchase agreements with various companies, including Constellation, Dominion, Kairos, and X Energy. Now, the purpose of these is to secure themselves some nuclear-powered energy in order to power the artificial intelligence systems going forward. So the good thing about this is that nuclear energy is one of the most reliable, efficient, and cheap methods of renewable energy generation that we have right now. So seeing this stuff get invested in, it's great to see from like a clean energy side of things that we're not just going to be ramping up fucking coal-powered facilities or, setting trees on fire again to absolutely destroy the atmosphere like we used to. So they are purchasing nuclear energy from these companies. Now, it's not as simple as it may sound. It's not like a natural gas power purchase agreement where you can just have shit get sent directly to you. You can do that. It's called a physical power purchase agreement. But what these companies did was called a corporate or a virtual power purchase agreement. So basically what that means is that Microsoft, Google, and Amazon are subsidizing the creation of nuclear power energy generation systems from companies like Dominion, Constellation, Kairos, and X Energy. So this is the idea of additionality. That's kind of the key term of the day here for us. So the way that the deals work, there's variances between all three from these companies here, from these three big tech companies, but the big factor at play in each of them is additionality. And so basically all this idea of additionality means is that the power from these nuclear reactors that are again funded by these big tech companies is not just going directly to the companies themselves. Now, they are guaranteed a certain amount of power when these reactors come online, but the idea of additionality means that they are adding all of this power to the entirety of the local grid. So it's not like they are just funneling this directly to, Microsoft's data center or something like that. It's going to the entirety of the local grid, and so they kind of guarantee that Microsoft data center will be able to get a minimum amount of energy based on this addition. So hence that additionality. So the advantage received by these tech companies is local grids are going to have enough power to support their artificial intelligence applications without ever worrying about that stuff having to come offline, because once again, it is nuclear, and nuclear doesn't go away when the sun disappears or the wind stops blowing. Then at the same time, these power purchase agreements give these companies a fixed price that's expected to be a discount to the average market price over the 20 or 25-year lifetime of these deals. So in addition to the expected benefits or absolute hellish chaos and destruction coming for society from artificial intelligence, in addition to those hopeful, fingers crossed, expected benefits, we can expect a benefit from increased energy generation or just increased energy supply. And that is the prime example of what your nerd professor was talking about when he said positive externalities. So if we go ahead and take a look at the cost of generating 1 kilowatt hour of energy in the United States compared to other countries, the US is basically middle of the road. It costs us about 18 cents per kilowatt hour in 2020. Actually, this was through the first 6 months of 2024 that we have right here. So the United States, 18 cents per kilowatt hour. In China, it's 8 cents. In Germany, it's 37 cents. Just going over the top 25 GDPs, the largest 25 economies in the world, are what we're showing in the chart in yesterday's written edition. The highest is Italy at 46 cents per kilowatt hour, and the lowest is Argentina at 2 cents per kilowatt hour. So did you notice any trend there in the few countries that I mentioned? Well, the ones that have extremely high cost of energy generation also have extremely low or no or negative GDP growth. See, Germany officially entering the second year of a recession, and meanwhile Argentina, blistering growth, Mexico, Russia, India, China, ridiculously fast growth, largely because they have energy generation costs that are so damn cheap. Now, there are other factors at play here, but because energy is an input to literally everything that goes into the GDP equation, if you can lower your cost of energy, you're also lowering the hurdle rate for the ROI when it comes to investing in projects for economic growth. So you make it a lot easier to create these projects and invest in actually growing the economy. So what's a great way to speed up GDP growth? To lower energy costs. How do you do that? You scale the fuck out of cheap and efficient energy, and what's the best way to do so? Nuclear power, at least as we know of right now. Now, the other chart that I included in here, which shows the average cost per 1 megawatt hour of energy generation by these different renewable energy generation processes, including biomass, geothermal, hydropower, nuclear, wind, and solar. We see that nuclear is not only the cheapest, but also the most efficient. Again, this is all on an average basis. The real reason is because nuclear has a much smaller range of what its cost could be compared to something like wind, which is going to be very different when the wind is blowing quickly versus when the wind is blowing slowly. So it's a lot more reliable, a lot more efficient, just kind of the best way to go about it. Hopefully just none of these things blow up and go full, goddamn Chernobyl on us. But if it requires stealing my personal data in order to build out a bunch of nuclear power, reduce the cost of energy generation across the United States economy-wide, and to make sure that we don't get overtaken as the global power, the global reserve currency by China, BRICS, any of these other countries, the most important thing that we can do is lower energy costs, and having big tech companies invest in nuclear power generation that benefits the entirety of the grid rather than just themselves is a great way to do so. I hope that made sense, and please let me know if it didn't. But for now, let's go ahead and move into some of these big stock movers. So first and foremost, we have Spirit Airlines as our big ripe name of the day. When I say ripe, I really mean it with this one here today. This would be like a disgustingly brown banana for how ripe this stock is. 53.06% on the day. Nope, that is not a typo. That is not a speech. Oh, that is not anything right there. Spirit Airlines save was up 53%. They really did save the day. because it turns out the company isn't going bankrupt. Now, that is absolutely horrific news to legroom on airplanes across the entirety of the United States, but it is good news for anybody that holds Spirit Airlines shares. So yesterday was the deadline for the company to refinance about $1.1 billion in debt that it's working with, but the airline managed to strike a last-minute deal in order to extend that deadline to the end of December. So basically, unless they can raise the financing between now and then to pay off some of this debt or come to some kind of restructuring agreement before then, they're going to be in the exact same position at the end of December. But again, the stock was up 53% because it's not going bankrupt. They also, this was pretty funny, it doesn't matter to this at all, but it was pretty damn funny, I thought. They hired Frankie Muniz, you might remember him from Malcolm in the Middle, he was Malcolm from Malcolm in the Middle, for a marketing campaign called Malcolm Not in the Middle, which looks like it's going to be absolutely hysterical, and I really hope I get to see some of those ads. Okay, moving on down into another piece of shit fucking flying company. We have Boeing. The company actually managed to rise 3.12% on the session. You know, broken clocks are right twice a day. Blind squirrels catch nuts once in a while. Occasionally, I can string a full sentence together. So sometimes Boeing can go 24 hours without shooting itself in the foot, face, arm, legs, chest, pretty much everywhere. And yesterday managed to be one of those days. So this company, calling it beleaguered is like a compliment for Boeing at this point. But they did manage to reach a tentative agreement to end the ongoing strike of their machinists. So machinists at Boeing had gone on strike a couple of weeks ago over disagreements over pay. They wanted a 40% raise. Boeing only wanted to give them a 30% raise. They are settling at 35%. There's also going to be an increased signing bonus from $5,000 to $7,000 and increased 401k contributions from Boeing. So overall, it seems like this is going to get agreed upon, but it's finalized on Wednesday. We'll see. I'm sure they're going to fuck it up somehow over the next 2 days. If you give Boeing a chance to fuck it up, they absolutely will. So it's going to be interesting to see how this plays out over the coming days. But God, what a fucking embarrassment. All right, let's go ahead down into our stinky, rotten movies of the day. We have VF Corp. The stock is down 7.24%. You might not recognize VF Corp right off the bat, but if you were a cool kid in middle school, you absolutely are going to recognize their brands. This is the parent company of North Face, Vans, all those brands that middle schoolers and hipsters alike absolutely adore, and people like me absolutely fucking hate. Now, thankfully, they got another hater joining the ranks of me and all the other cool people on the planet. That is, of course, JP Morgan. So, JP Morgan yesterday joined the ranks of me and all the other haters of VF Corp, saying, basically adding VF Corp to its, quote, negative catalyst watch list. Holy shit, dude, I really can't fucking speak today. JP Morgan added VF Corp to its negative catalyst watch list. They pointed to wholesale challenges and ongoing traffic headwinds for the reason for cutting fiscal year 2025 earnings estimates. Once again, that led to a downgrade of shares, and that subsequently led to yesterday's sell-off. Okay, moving on down into UPS. The ticker symbol was ups, but it absolutely was not yesterday. Down 3.38% on the session. Much like Boeing and its machinists, the longshoremen in the ILA, the Teamsters and fucking that work for UPS. All these workers, all these employees out here asking for things like livable wages, you guys are getting a little bit high maintenance on me, getting a little bit annoying, to be quite honest with you. And it seems like Barclays agrees with me here too, because Barclays went ahead and downgraded shares to underweight for UPS yesterday. Now, they cited this new, quote-unquote, new labor deal that was actually signed in 2023 as one of the reasons for doing so, but Barclays also cited softer demand, falling pricing power, and a, quote, difficult year-over-year cost comparison as a reason to sell shares heading into Q3 earnings, which are coming up in the next couple of days, I believe. They did maintain a $120 price target, and I think shares currently trade around $130, even after yesterday's sell-off. Let me go ahead and double-check that. Don't want to give you guys faulty information. Yeah, 131, 131.33, and so that means hang on, let's go ahead and see. Okay, so they're calling for about an 8% loss. So, you know, nothing major. If you want to take a flyer, go ahead and check out some UPS shares, but keep in mind you are going against Barclays. Okay, moving on down into our final story of the day, our thought banana. We were talking about Texas dream, and excuse me, you know, it used to be the American dream was waking up in Long Beach, view of the sun, ocean, some fucking chorus of SSRI-fueled celebrities walking down Rodeo Drive and pretending as if they don't hate themselves and their lives. That used to be the dream. Moving out to California, living where it was sunny, the Golden State, best weather in the entire world. No longer. Seems like Americans have replaced that with a dream for low to no income taxes, less aggressive homeless people, and chicken fried steak, to be quite honest with you, which I think are some great things to be driving your reason for relocation. And that is, of course, what we're talking about here today. The states in which Americans moved to and moved from the most in 2023. This is something that we always look at this time of year when the Census Bureau publishes this data. And we got the assist from Sherwood News, our homies over at Sherwood News, who wrote a big long report on this stuff. Go ahead and check out this their longer form report if you want to get into some of the more cultural and political aspects of all of this. We don't do that here at the Peel. We're just focused on the economic side, how this could impact markets, macro, or your money. And so what we're seeing is if you are somebody in states like California, New York, Massachusetts, Illinois, Jersey, Michigan, Pennsylvania, Louisiana, this could be hurting your wallet pretty soon. So what are we seeing here? Well, like I said, the Census Bureau just dropped its data on where Americans moved to and from the most in 2023. Now, the top 5 states in which Americans moved to in 2023, this is going to sound real familiar to you, but it's Texas at number 1, Florida at number 2, then North Carolina, then South Carolina, and then Arizona. That's pure numbers. That's just the absolute numbers right there. It's not adjusted for population or anything. If it was, like North Carolina would be above Texas, for example, but we didn't want to do all that smart shit here. So the top 5 states that people moved from last year in 2023 included California at number 1, followed by New York, Illinois, and no surprise here, New Jersey. Why would anybody stay in New Jersey is the real question. And in the 5th place spot, my new home state of Massachusetts. It's pretty funny. I did the exact opposite of what this data is suggesting in 2024. So I'm a former North Carolinian. I was born and raised in Massachusetts, North Carolinian for a couple of years after college, and back to being a Massachusetts now. So doing the exact opposite of this, but it's interesting to follow these trends. We're seeing very similar trends to, it's the same exact thing that we've seen in the entirety of the post-pandemic period. So the pandemic really kind of caused Americans to reshift their focus on what matters in terms of their living situation. Now, it's not like, moving to Florida is a new trend that a fucking pandemic induced. Florida has been the leading state for immigrants within other U.S. states to come to since, for the past, basically forever, for a long, long time, as far as the data that I was looking back to, at least over the past decade or so. Much of that is because old people like to move to places like Florida, Arizona, warm places, basically, after they retire so that they don't freeze to death or something. I don't really know why, but either way, it seems like they should be worried about the fucking heat, if you ask me. But either way, the snowbird idea is not a foreign concept at all. A lot of people do that kind of shit. They'll actually make money where the economy is good and then move down to, other places for cheaper cost of living, better weather when they retire. So that was largely the big trend that was driving, intra-U.S. immigration prior to the pandemic. Post-pandemic, we're also thinking of, cost of living, especially in the context of inflation. We're thinking about having space to kind of spread out a little bit. We're thinking about working from home and going somewhere where you don't, live in a fucking 1-bedroom shack for $6,000 a month, like in New York and LA and Boston or Cambridge. So it seems like that trend is largely still in place. But then again, places don't just become high cost of living in a vacuum. It's not like Boston just decided, like, yeah, you know what, our grocery prices are going to be 30% higher than the rest of the country on average. It's because people want to live in these locations. There's something intrinsic about these locations that cause a lot of people to want to go there. And because a lot of people are going there, there's going to be high demand for goods and services, and that is going to increase prices. This is something that kind of works on a cyclical effect. Now, it might work over the course of decades or even centuries, but at some point, the places that are low cost of living and attracting a lot of new residents, once they attract enough residents, those places are going to be high cost of living areas. It's just, passing the football back and forth. It's the exact same thing. We saw this, what was the last big intra-migration in the United States, the fucking Oregon Trail. I guess we don't really have much to base this off of, but it does seem like, at least in theory, that just kind of makes sense intuitively. If I sound like a fucking psycho and an idiot as usual, please feel free to let me know. Shoot me an email, David@WallStreetOasis.com. And the question of the day is that, how long will these current state-to-state migration trends last? Is there any changes that we can expect that could shift up where Americans are moving to? And then finally, how long does it take for current low cost of living areas to become high cost? We're already seeing it in cities like Austin, where Austin became like every tech mogul's dream when, Joe Rogan and Elon Musk moved there in 2020. Now there's an influx of fucking, just an influx of low self-esteem, low IQ people moving into these locations because it seems like it's going to be fun. And that causes them to become then high cost of living and kind of negates the entire purpose of moving there. So It's going to be interesting to see how these trends play out over the coming years. But, that about does it for us here today. I hope you guys thought some of that was cool. And of course, the quote we'll leave you today with is from Mr. WSO. I hope I'm pronouncing that right, but this is one of those old fuckers from like the 17th century or something. Auguste Comte. Maybe. I really don't know how to say it, and I also think it's French. So that, I'm not even going to try to sound French. I would never stoop to that level. But he said, very short quote for us here today, demography is destiny. Like I said, apes, that about does it for us here today at the 𝗪𝗚𝗀𝗪𝗀 Daily Podcast of the day. Hope you all enjoyed it. Hope everybody's having a good week so far. Let us know if there's anything cool going on in your world, as we'd love to talk about all that stuff here today. I'm David at 𝗪𝗏𝗪𝗏𝗪𝗏𝗪𝗏𝗪𝗏𝗪𝗏, and in the meantime, happy investing, happy trading, and we'll see you guys next time. Bye now.